Hello, good morning. As Tiana mentioned, I'm Julie Smith. I am the Director of Research at Medici Ventures. We are based in Salt Lake City, and we are a corporate venture arm of Overstock.com and a wholly owned subsidiary. So some of you might know that Overstock has been a longtime supporter of Bitcoin and blockchain. All the way back in 2014, we were the first major retailer to accept Bitcoin on our site. That was the same year Medici was founded. In 2015, we became the first company to issue a private blockchain security. In 2016, the first to issue a public blockchain security. And then finally this year, we began accepting over 40 major altcoins on the site. So longtime supporter. This is a map of Bitcoin purchases by country in the last 12 months, and we're excited about it because it sort of validates the whole reason we got into Bitcoin in the first place. And the story behind that is that our CEO and founder, Patrick Byrne, is personally interested in Bitcoin and sort of mentioned in passing almost to a reporter that he might start accepting Bitcoin on the site. And so within a couple of days, he received hundreds of emails from people all over the world sort of clamoring for him to do this. And he realized there's all this latent demand out there globally for Bitcoin. And so today we see, we've had purchases in over 50 countries in the last year. So we're really excited about that and really excited to support the ecosystem. Medici, as I said, was founded in 2014. Our mission is to advance blockchain technology. And there are really three core tenets or principles behind our investing philosophy. And first in that, we advance blockchain technology that democratizes capital. That means both enabling people to have easier access to capital, and also we're excited in the way that blockchain will help in the capital formation process. So helping people to become owners of capital. And ultimately, we think that is going to make capitalism itself work better. The second point is that we are advancing blockchain technology that eliminates inefficient middlemen. Too often, the institutions that were originally created to establish trust in the system become roadblocks, and whether that's through regulatory capture or sort of intentional opacity and inefficiencies that are created, we are excited for the way blockchain is going to eliminate those middlemen and help to connect us more directly. And then finally, our third main tenet is that we advance blockchain technology that rehumanizes commerce. And that means both enabling more people to enter into the formal economy, but it also means allowing people to participate more fully in the transactions in which they participate. So we believe blockchain will allow for greater individual freedom and empowerment. It'll allow people to marshal their own resources and derive benefit from their own resources and connect more directly. So blockchain in capital markets. One reason I chose to speak to capital markets today was because it's my background. I spent the last several years at Morgan Stanley. I was in sales and trading, and it's where I originally became interested in blockchain. But the bigger reason I chose to speak to it is because this exemplifies a system that needs democratization, disintermediation, and rehumanization. We've got a wildly complex financial system where transactions take days or weeks to complete. It goes through, what could be dozens of institutions in the middle. And so, it's also a huge market opportunity. The financial services represent about 7% of the US economy, and Medici has long recognized financial services as sort of an area of low-hanging fruit and a perfect application for blockchain. So in 2014, we founded a company called tZero, and today I'm going to walk through two areas where tZero is developing blockchain solutions in securities lending and in settlement and trading. So securities lending. What is securities lending? A lot of people on Wall Street even don't know what securities lending is, haven't ever heard of it. Well, here is how it's supposed to work. You have an inventory provider of stock, like a pension fund. They would like to loan out that stock to generate additional revenue, and you have short sellers out in the market who need to borrow stock to cover their short sells. So typically a pension fund will work with a prime broker to custodian their shares. And a prime broker will sell out locates to a stock and will have an agreement with this pension fund to share, say, 30%. So $6 of the $20 goes back to the pension fund. But the problem is that there is very little in the system today to prevent these prime brokers from issuing multiple locates referring to the same underlying shares. So instead of going out to just one short seller, they'll go out to multiple short sellers, collect $20 from each, and share, again, only 30% of one of these transactions with the pension fund. And this creates a big problem in the market. You now have a situation where sellers are selling more shares into the market than that exist, and that creates a lot of instability in the financial system. And if the price of the stock goes up and all of these short sellers need to cover their shorts, they typically go back and just lend more stock. And so you end up with a situation where you have this perpetual layer of phantom shares that exist in the market that really exist in many cases just to manipulate the price of the shares. So it creates a lot of instability in the system, and it also is rife for abuse for those who are trying to manipulate prices in the market. And there's another issue that arises here in that usually these prime brokers work together. Prime broker 2 will be the pension fund's broker. They'll custodian their shares, and then prime broker 2 will sell locates to those shares to prime broker 1 and can give back 30% to the pension fund. But then prime broker 1 goes out in the market and sells that locate for 20. And then through the overnight repo market, they'll kick back some portion to prime broker 2. So the pension funds and inventory providers are missing out on a large share of the revenues in this system. How big is this market? Well, in 2015, there was about $1.7 trillion worth of stock on loan on average throughout the year. That's about the levels that it was at pre-crisis. But what that means in terms of revenue for the banks was actually a very difficult question to answer. And back in 2005, Overstock filed a lawsuit against Goldman Sachs and a couple of the other major banks. And some number of years and $35 million later, they received an answer. And it turns out that securities lending comprises 75% of the North America prime brokerage revenue of Goldman Sachs. So essentially, you're taking a large portion of the profits that these pension funds could be making in a more transparent market, and you're sort of piping it over, and it forms 75% of the revenues of Wall Street. How big is this problem in terms of the instability that it creates? Well, Alan Greenspan was summoned to, during the financial crisis, was summoned to speak to the causes of the crisis at the time, and he said this: "There are additional regulatory changes that this breakdown of the central pillar of competitive markets requires in order to return to stability, particularly in the areas of fraud, settlement, and securitization." And usually people think of two of these three, of fraud and securitization. Fraud, thinking of Bernie Madoff scandal, and securitization, thinking of mortgage-backed securities. But often people forget that settlement was one of the major causes of the crisis. And it was actually a settlement freeze that first caused the government to step in and act during the crisis. And much of that was due to the instability that this naked short selling had caused in the settlement system. And there's there are some more recent examples of how this has been a problem for companies. And some of you may have read about this case, Dole Foods, earlier this year. But Dole went private back in 2013. And shortly after they went private, there was a lawsuit filed where the other shareholders had accused the owners of artificially decreasing the price of the shares so they could buy the company back at a lower price. 2 years later, the court ruled that they indeed were right, that they were owed $2.74 a share plus interest back to the original shareholders. And so this was a victory for the shareholders. But the problem was that they then received 49 million valid claims on what were only 37 million shares outstanding at the time. And not only did they receive these claims, they were actually valid claims. They're what they call facially valid claims, where these folks had valid locates on this underlying stock. And so the courts kind of scratched their head, what do we do about this? And at the end of the day, some weeks later, they decided, well, it's just too difficult a problem for the courts and the lawyers. It's too arduous, it's too expensive for us to go back and try to figure out who actually owned the underlying shares. So they shifted that burden to the shareholders themselves and said, sorry, you're going to have to work with your broker-dealers and with custodian banks, and the burden of proof is on you to prove that you actually owned those shares at the time. And so really it ended up being a loss for the shareholders, and nobody knows if who and how much was received by those who were owed this payment. And then the last point I'll make around why this is such a big problem is because of this impending pension tsunami. There's actually a website out there called pensiontsunami.com, and it has this list of just a daily news feed of articles that are coming out about this crisis. We estimate that the pension funds are missing out on about 1% to 3% of returns in the last 10 to 15 years because of what they're not receiving in securities lending revenue. And that amounts to tens, if not hundreds of billions of dollars that the pension funds are missing out on. So again, you have a situation where you are sort of siphoning off revenues from these funds and piping it into Goldman Sachs and others to comprise 75% of their prime brokerage revenues, which, by the way, is a very large proportion of their overall revenues. So it's a very significant amount. And pensions are catching on to this. Earlier this year, it was just in August that a pretty high-profile lawsuit was filed where 3 public pension funds sued Goldman, Morgan Stanley, and 6 major investment banks over this problem and potential market collusion. So tZERO has developed a product to improve this market. It's a blockchain-based platform. It completely removes the prime broker from the equation. And it connects inventory providers and short sellers directly. And it's mutually beneficial. Because of the price transparency created, the short seller receives much more than he otherwise would, and the pension fund receives a much greater proportion of the revenues than they otherwise would. So this is a blockchain-based platform to buy and sell digital locate receipts, and it also ensures that one locate refers to one underlying shares, this one-to-one relationship, so you don't have this problem of having multiple locates on the market that do not refer to any actual underlying shares. So we're really excited about how this product will change the securities lending landscape. It is live now in alpha. We've got $8 billion of inventory online today. We're expecting about $120 billion to be online in the next couple of weeks. And then on the demand side, we will, by November 1st, we'll be plugged in, and about 8,000 traders will have access to this platform to begin buying locates. So second area of capital markets I want to talk about today, where blockchain will have a huge impact, is securities trading and settlement. So for my grandmother, just the average person, when they think about buying a share of stock, they might think of something like this. You know, this nice gentleman on the left swaps some money with, you know, somebody who's trying to sell 3 shares of IBM. He buys 3, and, you know, that's how the transaction goes. Well, as we all probably know, it's a little more complicated than that. We all work for the broker-dealers. You know, and this investor on the right may actually be buying some number of shares from an institutional investor on the other side of the transaction. But the broker-dealers themselves actually don't transact directly either. Well, they interact through a company called the DTCC. And so they will trade shares through this corporation, but it's actually even a little more complicated than that. The DTCC has a subsidiary called CD & Co., which most of us had never heard of, right? And furthermore, CD & Co. is the company that actually owns all of the underlying shares in the US markets here. And what they issue to the DTCC are not actual shares, they're share entitlements. It's a contractual right to those underlying shares. So these contractual rights go out to the DTCC and out to the brokers as well. Why do we have this complicated metastructure? Well, in the late 60s, there was a paperwork crisis on Wall Street, and literally guys in bicycles with backpacks full of paper stock certificates riding around. And as you might imagine, this is not the most scalable solution for trading shares. So by the late 60s, trading volume exceeded what they could handle in paper. And in 1973, the DTCC was created to centralize ownership of shares and therefore make the system more scalable. But what that legacy has left us with today is this complicated mess where in order for gentleman A and gentleman B to transact, they need to go through a maze of institutions. It takes 3 days for a trade to clear, now 2 days, T+2 as of last month, but still days for that trade to clear. And what the gentleman on the left owns is not an actual share of stock. It's a contractual right to a contractual right to a contractual right to an actual share of stock. There is a better way to do this, and blockchain can help. tZero has created a platform in order to issue Overstock's first public blockchain security. They created this trading platform. It is blockchain-based, and the trade is the settlement. It's tZero, as their name implies, and it trades settle instantly, and the system completely bypasses the DTCC. And what's really interesting about this, especially this year, is that we have witnessed an ICO boom. Now, how many of you have bought an ICO this year? Right, a lot of us here. $3.2 billion, over $3.2 billion have been invested in ICOs. It's far outstripped VC investments. But in August, or July of this year, the SEC finally issued guidance on what was a big question in the space, which is, what is the status of these coins or tokens as securities? And they finally ruled on the DAO and had declared the DAO to, in fact, be a security. And this was sort of the first shot across the bow in terms of regulation in the space. And they issued this investor bulletin on the same day that said, yes, many of these coins or tokens are actually, in fact, securities. And additionally, they also made clear that if these are securities, then any entity that is trading or exchanging these securities is subject to federal regulation. So we now are in a world where we need an approved trading venue that can trade blockchain instruments, and that is SEC compliant. And there is precisely one of those in the world today, and that's tZero. So I will leave you today with a bit of news, and that is that tZero is launching an ICO. disclaimer at the bottom, terms are subject to change until about around November 8th, we expect. So asterisk around everything I'm about to say. But we will be issuing a SAF token. It'll be subject to Reg D, accredited investors in the US, and we'll be issuing up to 500 million tokens. Pre-sale begins on November 15th. And so if you have any questions, I'm here all weekend, or you can visit tzero.com/ICO, and there's a space for you to sign up for email updates. So with that, thank you, and I'll open it up to questions.
Earlier you showed how the prime broker was lending the same shares multiple times to different short sellers, so they were collecting fees on the same share. Now the short sellers sold that share to a buyer, right? There was a buyer on the other side of that. What would happen if those buyers demanded delivery of the actual stock?
Well, in the current system, they do demand delivery, but in the current system, they have trades take 3 days to clear. So you sell those shares, but you don't actually have to deliver them or deliver proof that you even own them until 3 days later. And so what happens, the plan usually is that a short seller plans to sell the stock and buy it back within the 3-day period. If they're going to naked short sell, that's how they try to cover before they have to actually deliver the underlying shares. But sometimes that fails, and sometimes the intention is to never actually deliver the shares in the first place. Because if the goal is to sort of drive down the price of the stock in the market, then they'll just short sell.
Enough buyers see that and they make a move to say, all right, we're all going to demand delivery of the shares. Now what do they do? What would happen?
Well, I mean, sometimes they just fail to deliver and have to return the money, or they just keep borrowing phantom shares. And they do ultimately give these valid locates, but you'll have this perpetual layer of phantom shares that exist in the market, this float. Yes.
So what do you think? What is your estimation of this reapplication rate that you have? Is it 3-to-1, 4-to-1, 5-to-1, and how much of T0 will eliminate that? Will it bring it down so there's zero reapplication?
Yes, I mean that's the goal, is that you have it's a 1-to-1 relationship, and that all of these locates actually refer to real underlying shares.
Hi, I 20 years at the street, so great presentation. Goldman came out with something where they, got a patent for its own Goldman coin for settlement. Yeah. So are you better than them? Are they behind you? Are they coming for you? Like, you sound like you're way ahead. So tell me.
Yeah, thank you. We'd like to think that we are. It's funny, I think Goldman has been probably the most, I don't want to say friendly, but the most forward-thinking almost. You look at kind of what Morgan Stanley analysts and some of the other banks have said about blockchain and Bitcoin, and Jamie Dimon saying Bitcoin's a fraud and all of this. So I'd say Goldman seems to be most forward-thinking, and this patent they filed, I mean, for what I understand, it's so broad and vague that it's difficult to enforce. I mean, I am not sure how quick they'll be to try to enforce their patent, but what we know is that T0 has a working system today. You can go on to T0 right now and buy shares or sell shares of OSTKP, which is Overstock's preferred shares that were issued back in late 2016. So to my knowledge, Goldman doesn't have a system up and running like this. I'm sure they're thinking hard about it. And the patent that they filed, or that was approved or provisionally approved earlier this year, was extremely broad and vague. I don't think it has anything that will apply very specifically to our platform.
So that makes you really unique. I know that's a loaded question, but you think that makes you really unique?
We are currently the only trading venue that can trade blockchain securities and is SEC approved. So yes, we are unique.
We got one up here, and then I'll bring the mic back.
We expect it to be a big ICO. I mean, I hesitate to throw out any exact numbers, but I mean, we would expect on the order of 50 to 100 to 200 million. I mean, we're expecting that kind of demand, but we'll see. A pre-sale begins November 15th.
Can you talk a little bit about the borrow and hard to borrow list? So i.e. if I have, an easy borrow stock like GE, there's no negative rate. But if I have Herbalife, for example, it's going to be a negative rate. How is that going to work?
Yeah, it's the way it works today. It's obviously extremely spiky, where there are these peaks in demand for these hard to borrow stocks. So for those of you who don't know, there is kind of a bifurcation, a difference between hard to borrow stocks and easy to borrow stocks. And there's a much higher, obviously those that are, when there's high demand, those that are hard to borrow are very expensive to borrow. And it's very spiky whenever, a news comes out that a short seller, all of a sudden wants to sell. We expect this platform to provide, and to go back to that point, often what the pension funds will see will be an average, right? But they don't realize that they're missing out on some, giant payout that the prime brokerages receive during this spiky period for a hard to borrow stock. And what this will create is a lot more price transparency in the market, so that supply and demand will be able to sort of meet each other during those periods, and that the pensions will be able to reap the benefits from, the risk they're taking lending out their stock.
We got one here.
So I had never heard of DTCC before you mentioned it, so I just did a little bit of Wikipedia. So it says that, their annual revenue is about $1 trillion, and they handled over 1.7 quadrillion worldwide. So if you are positioning yourself as at the moment, the only exchange where you'll be SEC approved and people can directly compete almost against the DTCC, doesn't that put you, and I looked, and it's owned completely by banks and brokers, and so obviously you have an extremely large group of people in the industry that would be very against you being able to do what you plan on doing, and as we know, money kind of rules everything, and money rules politics, and so there will be boatloads of money thrown to make sure this kind of thing doesn't happen. How are you guys positioning yourselves to be able to combat that kind of influx, these billions and billions and billions of dollars that are extremely vested in making sure that doesn't change?
Yeah. I mean, I think one answer to that is that, look, the blockchain and the crypto revolution is happening. It's happening. There are aspects of that revolution that the banks can't do anything about. So there's that's one piece of it. But the other is, well, I'll go off into a little story there. Overstock, some of you might be familiar with Overstock, and it's 10 to 15 year battle with Wall Street. So when Overstock first went public, they were the first company to do a Dutch auction style IPO, which didn't make Wall Street happy. So that was kind of started off on the wrong foot a little bit in our life as a public company. And by about 2005, our CEO, Patrick Byrne, noticed that there were, Overstock was getting killed in the market. And he started digging in and realizing that all this funny business was going on with this short selling. And so that was the start of a 10+ year battle with Wall Street. And it was really, it was a tumultuous time. I mean, we filed lawsuits against, Little Overstock filed lawsuits against all of the major banks. We won one of them to dig out this extremely important piece of information, which is how much of your revenue really is coming from securities lending. And so the little guy won in that case. And it was a long, hard fight. But, I think ultimately this is the economic efficiencies that will occur because of Bitcoin and blockchain are so powerful that, the banks and some of these what are now irrelevant intermediaries will of course fight to, keep that competitive moat and keep their position. But over time, number one, we're not afraid of it, I guess is what the point that I'm trying to make with our fight against Wall Street. And number two, this is going to reduce the cost of transactions in the market by 80 or 90%. I mean, the economics are so strong that I think it's an inevitability, and certainly there will be fights along the way, but we think this is the future, and we think this is where it's headed.
I actually have two questions. The first one is, what are the requirements to become a trader on T0? And the second one is, with regard to trading frequency, high-frequency trading is frequently viewed as a negative, but I think like 10-minute block times might be a little too slow. So do you have any thoughts on that and whether there's a happy medium for trading frequency?
Yeah, so you can sign up to become a trader. There's a portal on the site. It's called NeoTrader. So it's a pretty easy, intuitive interface to sign up. And it's an interesting question about high frequency. It's and how it will work out the latency times. I'd have to dig into that question a little more just to get our tech teams thinking on it. But it's a good question. I can get back to you probably with some answers in there.
Hi, could you help us understand the structure of the SAFT and the discount that you're getting as a SAFT investor? And then when will you anticipate the token actually being delivered?
So I unfortunately can't give you too many details just because they're still being worked out. Sort of big asterisk at the bottom of that announcement. But so if you go to t0.com/ICO, you can put in your email. There'll be email alerts coming out as all of that information becomes available. You can find it there.
So you had mentioned competing with like Goldman and other potentially regulated exchanges down the road, but it seems to me the real issue is going to be the decentralized exchanges that don't necessarily answer to folks. How do you feel about competing with those, and what do you see there?
So, I guess we're not really worried about it. It's going to be a process, right? It's going to be a process, and we have intentionally kind of gone down this route of working with regulators. We think that's given us a big advantage in kind of getting the camel's nose under the tent. And it's funny that in the last few years after this whole kind of battle that we had, it was quite a process to get this exchange, this ATS approved, SEC approved for blockchain in the first place. We think that this is going to be a process. We see kind of the long-term potential of that decentralization, but we think this is a first step, and we think we're kind of building the plumbing needed to get to the world of the future.
So I have another question. Okay, so you mentioned that of the banks that you've talked to about this, Goldman has been most friendly. So from my experience and research, it seems like these institutions are getting involved in these cryptos. To me, it seems almost to corrupt them. They're they're threatened, and so sure they might buy into them, so that then they have a stake in it and can ruin things down the road. So my question with that is, do you guys have some sort of filtering plan, like when you make your ICO, say that a lot of these big banks got really interested and they said, all right, let's buy up a ton of this, and then we can pretty much run this exchange however we want or run it into the ground. Do you have some sort of plan to filter who would be investing in this, or is it just kind of an open ICO where it's like, hey, you throw us money and you get tokens?
Yeah, certainly, we're intensely aware, I guess, of that tension, right? There's this tension between, what in some future state of the world where it's completely decentralized, it's, where, kind of the foundations of Bitcoin and the crypto revolution, you have all of these folks who are really excited about, being able to transact and to keep your, completely anonymously or pseudonymously. and there's a tension that exists about how much do you capitulate along the way in terms of kind of shifting the balance of power from that individual end user. How much of this KYC AML do you build into a token? How much, is kind of like this constant tension that exists between how do you get from where we are today in this highly regulated, highly centralized system to a future state where it's much more decentralized, where you have individuals having much more control over the components of the transaction. So we're aware of that, and I think it goes back to sort of our philosophy as investors at Medici. I mean, those points that we mentioned, we see the potential of blockchain to shift the balance of power and to kind of democratize capital, to rehumanize commerce, give individuals more freedom and control. So we're aware of that, and I think it's still, the details are worked out every day. But I mean, it's a good question. I don't know, I have like lots of details to answer with you, but we kind of believe that there will need to be a period, and there will need to be systems that sort of bridge the two worlds. And that's kind of the route that we're taking and that we've taken with T0.
So let me ask you this. A year from now, what does your organization look like? Like, is it going to look like, are you going to have like sales, trading, and compliance? And like a year from now, what does your organization look like? Like, who do you need? Tell me about it.
It's a small organization. It's a lot of software. It's not going to be a replication of a traditional investment bank by any means. And I mean, I think a lot of those functions will be consolidated. A lot of them, just to go back to earlier in the talk, I mean, coming from Morgan Stanley, I kind of walked onto a trading floor for the first time years ago and just thought, wow, this is a lot of people and, all this complicated things they're doing. And, the more that I was there, the more I realized that there's a lot of redundancy built into the system. There are a lot of components of the system, all of these intermediaries that are, too often there to kind of capture some portion of it and don't serve a real purpose, if not the real purpose of the organization, which is to kind of, turns out that most of this business is in securities lending and not, on the trading floor and cash traders sort of. So our organization is going to look vastly different from today's traditional exchange or investment bank. It'll be very much consolidated and very, heavily software based.
Do you know which blockchain the token is going to be issued on? Is it Ethereum or I think Counterparty? I think is another thing that Medici I think originally was working with. So.
Yeah. Details on the token, I can't speak to it today, but more details out in the next 2-3 weeks.
Any more questions, guys? That was a pretty awesome session. So they went ahead and updated the website, and so there's all the speakers and what they'll be speaking about. So if you want to check that, and we'll be getting information about food carts shortly. But put your hands together for.
Thank you.